Surprising news, the present gold rally is not the first of its kind. The gold rally during the stagflation period of 1970 to 1980 is a significant one in the history of the gold market. This period saw gold prices rise dramatically, starting from a relatively low point in 1970 and reaching new heights in 1980. This rally was driven by a combination of economic and political factors. The significance of this period lies in the fact that it was a unique time in economic history where both inflation and unemployment rates were high and low economic growth, a phenomenon known as stagflation. Understanding the factors that have driven the gold rally during this period, and the key milestones that have marked this period, is essential for anyone interested in the gold market and the investment opportunities it presents. Please make sure to like this video, subscribe, hit the bell notification down below and share among your friends and relatives. Stagflation period is significant in the history of gold markets because it was a time of economic and political uncertainty, which led to a major increase in the demand for gold and a corresponding rally in gold prices. It was a turning point in the gold market, as it transitioned from a period of relative stability to one of increased volatility and uncertainty. The state of the gold market in the 1970s was also influenced by the breakdown of the Bretton Woods system, which had pegged the value of the US dollar to the price of gold, leading to a devaluation of the dollar and an increase in the price of gold. This period in the history of the gold market was important, as it was a time of great uncertainty and instability, which led to a significant increase in the demand for gold as a safe haven asset. Investors lost confidence in the traditional investments like stocks, bonds, and real estate, and flocked to gold as a hedge against inflation during times of economic uncertainty. This led to a sharp increase in the demand for gold and a corresponding rally in gold prices. This period marked as a major turning point in the gold market, with gold prices reaching new highs and establishing a new long-term trend. Overall, the combination of economic and political factors during the 1970s created a favorable environment for the gold rally. As a result, gold prices reached an all-time high in January 1980, with the price of gold reaching $850 per ounce, which was a significant increase from the $35 per ounce it had been fixed at under the Bretton Woods system. The Iranian Revolution and the U.S. hostage crisis in the late 1970s were major international events that had a significant impact on the gold market. The revolution, which resulted in the overthrow of the Shah of Iran and the establishment of an Islamic Republic, led to a period of political instability in the Middle East and raised concerns about the stability of global oil supplies. Monetary policy and interest rates have a significant impact on the gold rally. The Federal Reserve's monetary policy can influence the gold prices by changing interest rates, which in turn affects the demand for gold. For example, during the stagflation period of the 1970s, the Federal Reserve raised interest rates to combat inflation, which led to a decrease in demand for gold and a drop in gold prices. However, as inflation continued to rise, the Federal Reserve lowered interest rates again, which led to a resurgence in demand for gold and a rally in gold prices. Additionally, the gold price is also influenced by the actions of other central banks, such as the European Central Bank and the Bank of Japan, which also influence interest rates and monetary policy. Overall, the impact of monetary policy and interest rates on the gold market is complex and multifaceted, but it is a significant factor that can drive the gold rally. Comparison of the current gold market to the stagflation period of 1969 to 1980 can provide insight into how economic conditions, geopolitical events, and investment sentiment may influence the gold market. Understanding the similarities and differences between the two periods can help investors make informed decisions about their investments in gold. Additionally, it can also help in understanding the historical context of gold market and how gold has been used as a safe haven asset during the times of economic uncertainty. The analysis of the current gold market in comparison to the stagflation period of 1969 to 1980 can provide investors with a better understanding of the potential future trends and movements in the gold market. The current gold market has several trends and patterns that can be compared to the stagflation period of 1970 to 1980. One trend that is similar is the continued demand for gold as a safe haven asset in times of economic uncertainty and inflation. Additionally, the current gold market also sees fluctuations in prices based on changes in monetary policy and interest rates, similar to how these factors impacted the gold market during the stagflation period. Furthermore, geopolitical events and political instability continue to influence the gold market, much like they did during the stagflation period. Overall, there are many similarities between the current gold market and the stagflation period of 1969 to 1980, and understanding these patterns can provide valuable insights for investors interested in the gold market. In conclusion, the gold rally during the stagflation period of 1970 to 1980 was a significant time in the history of gold markets. Understanding the factors that drove the rally and the key milestones that marked this period is essential for anyone interested in the gold market and the investment opportunities it presents. As the current gold market is still affected by the same economic and political factors, monitoring the gold market can provide valuable insights for investors. Please like, share, and subscribe the channel for more valuable information on gold markets and other investing topics.